For years, condos were marketed as the gateway to home ownership in Canada's most expensive cities. Glossy brochures promised urban convenience, walkable lifestyles, and investment potential. But in today's shifting real estate landscape, the story is changing. Condos, once seen as the hottest ticket in the market, are struggling under the weight of affordability issues, oversupply in some cities, and cautious buyers. Meanwhile, single-family homes, though still costly, are holding their ground, supported by steady demand from families, immigrants, and buyers prioritizing space. This divergence tells us more than just a tale of two property types. It highlights the evolving priorities of Canadian households and investors in 2025. The condo market under pressure. Condominiums have historically been the entry point for young professionals and first-time buyers. They've also been a favored asset for investors seeking rental income and appreciation. However, several headwinds are converging to challenge this segment. Affordability and high carrying costs. While condos often have a lower sticker price than single-family homes, the reality of ownership can be daunting. Rising maintenance fees, special assessments for building repairs, and high interest rates on mortgages make carrying costs significant. For some buyers, the math simply doesn't add up anymore. Oversupply in key markets. Cities like Toronto and Vancouver have seen a glut of condo construction over the past decade. Today, with housing starts in decline and developers hesitating to launch new projects, the market is left with inventory that isn't moving as quickly. Pre-sale cancellations and stalled projects are becoming more common, signaling deeper caution. Shifting preferences post-pandemic. The pandemic reshaped buyer behavior. Remote and hybrid work led many Canadians to prioritize space, privacy, and access to green areas over downtown proximity. This shift diminished the appeal of small, high-rise units in urban cores. Investor uncertainty. Condos have long been favored by investors, both domestic and international. Yet with weaker rental yields, regulatory changes, and rising costs, investors are rethinking the role condos play in their portfolios. Single-family homes. Steady demand, stronger fundamentals. In contrast, single-family homes are showing remarkable resilience, even amid broader market cooling. Detached and semi-detached homes, especially in suburban and mid-sized markets, are still in high demand. Lifestyle appeal. Families continue to see single-family homes as the ideal living arrangement. Backyards, private driveways, and more square footage simply provide a lifestyle that condos cannot match. This preference is amplified by the hybrid work era, where home offices and flexible living spaces are necessities. Limited supply. Unlike condos, where supply can be added in bulk through high-rise projects, single-family homes are constrained by land availability. Urban sprawl, zoning restrictions, and environmental concerns all limit new detached housing, creating sustained competition for existing stock. Regional strength. Cities like Calgary, Edmonton, and smaller towns across Canada have benefited from relative affordability compared to Toronto or Vancouver. In these areas, detached homes remain accessible to middle-class buyers, fueling steady demand. Long-term value. For many Canadians, single-family homes are not just places to live, they are wealth-building vehicles. Even in times of market stagnation, detached homes tend to preserve value better than condos, attracting both end users and long-term investors. The investor's dilemma. The divergence between condos and single-family homes is creating a dilemma for investors. On one hand, condos were once the go-to option for predictable rental income in urban centers. On the other, today's conditions, flat prices, high carrying costs, and uncertain appreciation make them less attractive. Single-family rentals, meanwhile, are becoming more lucrative. Families looking to rent larger homes rather than buy are fueling strong demand in the single-family rental market. Institutional investors are even entering this space, acquiring portfolios of detached homes in growing cities. Still, it's important to note that condos are not dead investments. Well-located units near transit, universities, or major employers continue to attract stable tenants. The key difference is that condos are no longer the sure bet, they once appeared to be. Regional perspectives: Toronto and Vancouver. Condos face the sharpest headwinds. Oversupply, affordability challenges, and high fees weigh heavily, while detached homes remain scarce and expensive. Calgary and Edmonton. Detached homes are in demand, offering relative affordability and space. Condos are less popular, though lifestyle-oriented developments near downtown still have niche appeal. Montreal, a more balanced picture, with demand for both condos and single-family homes, though the latter is seeing stronger resilience. Atlantic Canada. Detached homes remain the top choice, particularly for out-of-province buyers seeking affordability. Condos play a smaller role in these markets. Policy implications. This divergence raises questions for policymakers and urban planners. Condos were supposed to be the solution to urban affordability and density, yet they are struggling to fulfill that role in 2025. Governments may need to rethink incentives, zoning rules, and housing supply strategies to ensure balanced growth. At the same time, demand for single-family homes highlights the enduring Canadian dream of space and ownership. Balancing this demand with environmental and infrastructure concerns will remain a long-term challenge. What this means for buyers and sellers. For buyers, if you're considering a condo, do your homework. Look beyond the purchase price to maintenance fees, building health and long-term value. If space and lifestyle are priorities, single-family homes, especially outside the largest urban centers, may offer better long-term satisfaction. For sellers, condo sellers need to be realistic about pricing and patient with timelines. Highlighting amenities, building condition, and location is critical. Single-family sellers, meanwhile, can expect stronger demand, but still need to avoid overpricing in a cooler overall market. For investors, diversification is key. Condos may still work in prime locations, but single-family rentals are emerging as a stronger play in 2025. Consider regional trends and tenant demand before making moves. The road ahead. The divergence between condos and single-family homes is not just a short-term trend. It reflects deeper shifts in Canadian housing preferences. As buyers prioritize lifestyle, space, and value, condos must adapt to remain competitive. Developers focusing on larger, better-designed units with strong amenities may succeed, while cookie-cutter projects risk underperforming. Single-family homes, meanwhile, will likely continue to command a premium due to scarcity and enduring appeal. Whether as a family residence or rental investment, they remain a cornerstone of the Canadian housing market. So here's the question: are condos losing their shine permanently? Or is this just a temporary setback before urban living regains its appeal? And for buyers, would you choose a downtown condo for convenience or a single-family home for space and long-term value? Share your thoughts in the comments below. I'd love to hear how you see the future of Canada's housing market evolving.